Trump traders take profits off the table while Nvidia and Bitcoin hit new highs. Welcome to the Daily. My name is Jessica Ramir, a market strategist with Moomoo. US stocks are down for the first time since the US election. Investors are naturally taking profits off the table ahead of US inflation data being released in case it causes markets to be spooked. The S&P 500 is down ever so slightly, down 0.2%. Trump trade stocks were among the most notable losers. Tesla shares losing 6% on Tuesday. But it is important to note that they're up 31%. That's how much they've gained since the election, rising $198 billion in market value since Trump was elected, while Trump media shares also fell overnight, losing 9%. Meanwhile, Nvidia shares went the other way, rising back to new record levels as traders are positioning ahead of a potential rally next week, anticipating Nvidia to report a better than expected quarterly profit result when they release earnings next week. In other markets, sophisticated traders are increasing their holdings in the US dollar, with many expecting that Trump's policies will drive up inflation. And as a result of that, that probably means US interest rates will stay higher for longer. Now, this sentiment was pretty much said in black and white by a Fed speaker, Neil Kashkari, overnight, who indicated that it could take a year or two to bring US inflation back to target. The takeaway here is that you might be expecting higher levels in the US dollar and expect higher bond yields. And as a result, this is probably going to push down the gold price. The gold price is down 0.5% today. It's now down 6% over the past 13 days, and pressure on gold is mounting. Also note that all eyes are on Bitcoin. There's speculation Bitcoin could imminently punch through $100,000 for the first time ever, of course, because Trump is expecting to take BTC into the US government strategic reserve asset pool, so to speak, similar to gold. So we could witness history today if Bitcoin rises above the key $90,000 US level that it's breathing down the neck of at the minute. Locally, we should keep an eye on Block shares. Overnight, Block in the US counterpart, they rose 4.5%, rising back to their highest levels for this year. Keep an eye on Block. It is the biggest tech company on the ASX. Speaking of the ASX, today the local share market is expected to come under continued pressure again, of course, with commodity prices being pressured by, of course, that higher US dollar. The US dollar is now back at April highs. Also keep an eye on CBA today, which is due to release their quarterly earnings. The Commonwealth Bank of Australia this week became the biggest company and the first in Australia's history to reach a record $250 billion market valuation. CBA's results are probably going to show that Aussies are finding it tough, with overall lending expected to decline, but that doesn't mean CBA shares won't continue to climb. We have to remember there's $4 trillion in superannuation assets in Australia, and there's only so many companies that superannuation funds can invest in, and that's plenty to consider for the daily.